On May 2, 2019, the SEC proposed amendments to the financial reporting requirements for acquisitions and dispositions of businesses. This video was prepared by the SEC's Office of the Advocate for Small Business Capital Formation to highlight some potential impacts of this proposed rule on small businesses and their investors. It is meant only to provide a very high-level summary and should not be viewed as a substitute to reading the full proposal. Let me start with a little background. When a company buys or sells a business, including a real estate operation, it can result in significant changes to its results of operations, liquidity, or future prospects, which can influence investors' decision-making. Currently, Regulation SX requires reporting companies, including smaller reporting companies, to file audited financial statements of an acquired business or real estate operation and unaudited pro forma financial information for an acquisition or disposition if the business is significant. Significance is determined by calculating certain prescribed ratios that compare the acquired business to the reporting company's business. These ratios are referred to as the significance tests. As part of the SEC's ongoing evaluation of its disclosure requirements, the SEC previously sought comments more broadly on the rules related to certain financial disclosures, including on the effectiveness of financial disclosures about acquired businesses. The proposed amendments, which take into consideration comments received, are intended to improve for investors the financial information about acquired and disposed businesses, to facilitate more timely access to capital, and to reduce the complexity and cost to prepare the disclosure. Those changes would include, among other things, revising the significance tests used to determine whether separate financial statements of an acquired business are required and conforming the significance thresholds and tests for a disposed business, amending the pro forma financial information requirements to improve the content and relevance of such information, no longer requiring separate financial statements for acquired businesses once they are included in the company's post-acquisition audited financial statements for a complete fiscal year, and generally aligning the requirements for acquired real estate operations with those for other acquired businesses where no unique industry considerations exist. Many small businesses may think this is a rule that matters only for the larger public companies. However, the proposal would impact smaller public companies as well. It could decrease the cost of disclosing financial statements for acquired businesses, which could improve capital raising opportunities for small businesses. The SEC is soliciting public comment on the expected impact and effect of these proposed changes, including on small businesses, before deciding whether to adopt the proposed changes. We encourage small businesses and their investors to submit comments expressing their perspectives. The full text of the proposing release is available on sec.gov. Comments can be submitted online at sec.gov, via email to rule-comments@sec.gov, or via mail to our headquarters. The SEC considers all comments that are submitted on its proposed rulemakings, and it is important that your views are heard as the SEC considers finalizing these amendments.